everyone, and I trust that you're well. Welcome to episode 3 of Let's Talk Insurance. And remember, if you haven't subscribed, kindly subscribe and let us get to 500 subscribers by the end of this series. I'm once again joined by Steven, and we are going to talk about life insurance. So, for starters, I will share thoughts common to life insurance, and you let us know if you're correct, if it's just an assumption, a myth, and whatnot. So karibuni sana. So the first one is, I don't need coverage because I'm single and I don't have a dependent.
It is anytime that you talk about the life insurance, you're talking about issues that have to do with death and accidents, because the life insurance mainly would touch on life of a person either on the basis of their death or having total permanent disability, where the insurance will compensate to the next of kin. So in that case, someone will say that then there is no, always there should be a person who somewhere in one way or another, especially someone who's already began to work, your income, you're earning income. So it means that there must be someone somewhere who either directly or indirectly would be touched in the event either you die or either you end up having disability. In that case, then someone would consider those people. Well, of course, you minding, yes, I don't have any person who is dependent. You find even in our time right now, where you find even young people who their parents are also in one way or another depending on them. Maybe not as much, but somehow in one way or another they will be directly impacted on their death or in case they have accidents. So a young person, while they may not have immediate people now in a family, it's also helpful for them, and not just also thinking about just their accidents or dying, but they have a long life that is way ahead of them. And because they have a life that is way ahead of them, they have families to get, so it's also important for them to consider being able to insure themselves.
And the second one is, my life insurance coverage only needs to be twice my annual salary.
Anytime, of course, you have to spend on insurance, you have to think about it's not just insurance. You're thinking about widely also how you're managing your finances, and to be able to attend to the main things that you have to think about while you're investing. It's also good to be able to think about securing. So while you're looking at the income that I have, and within the income that I have, while I'm also diversing in terms of how I'm investing, it's also very good also to think about investing. So you may not want to throw your monies into the insurance because you need to insure. You need to think about, like, how can I be able to manage also risks that I'm also exposed to, and so invest as much that is more fit or that is enough at least to be able to take care of the risk that you're exposed to. So it's not important, it's also not prudent to take all the monies and then of course channel them to the insurance. You need to think about or investing as much, but also securing also equally, also as much as that is necessary for an average person.
Okay, my term life insurance coverage at work is sufficient.
It depends. It depends because when you talk about term assurance, it means that it has a time limit. It has a time limit. Maybe the company has given you a term insurance of 15 years. So once already that insurance lapses, then it means you're out of cover. So you're not covered in that state. So while you're working, it's important, yes, perhaps the insurance has, your employer has given you a term insurance. So it takes care of you up to a certain limit. But know that it has a term limit. So once it elapses, as long as if you're within that within that job, perhaps it can be renewed. But then you need to be thinking that this cover that I have has a limit. So you need to think about, once I'm out of the cover, then how am I going to take care of myself? if in case I'm not within the same organization. Yes.
The cost of my premiums will be deductible.
When you talk about deductions, yes, anything that also passes through the insurance as a financial institution, there is taxes that actually that are removed. Whether it is a payment that is being made, it's taxable because it's money that is coming to you, and government always will find a way of being able to tax, but of course fairly. As a matter of fact, when it comes taxes, when you have a life insurance, some life insurances actually relieve you of the taxes that you pay to the government to encourage more people to take up insurance, because when the government actually borrows internally, you've heard about government borrowing internal borrowing from the within the local market. The monies that normally the government actually borrows from sometimes is usually on some of the life insurances, because life insurance sometimes is long term, and so some of those monies are the ones that the government borrows, and so they encourage people to take up life insurances. They offer also benefits as in form of relieving of, we talk about tax relief. So like if you're paying the government taxes of this much, then by having that some of those life insurances, the government cuts off your taxes 15%, like those people who contribute on either monthly. 15% of the money that you're paying to the insurance is reduced off from your taxes that you pay to the government.